Since 2021, Dan's mentorship has turned over 100 traders profitable.
Consecutive losses. If you understand your win rate, then you know what your average and your max consecutive losses are, or they're likely to be. But you're trading at 2% risk and you have a 50% win rate, you're guaranteed to hit the drawdown limit at some point. Every trade gives them information, so it's a win. Every single trade is giving me something.
Welcome back to The Trading Battle. I'm your host, Jason Sen, and today we're shifting our focus to the discipline and data that underpins consistent success. We're joined by someone who's turned data into an edge, literally. Dan Munday has over 12 years of experience in the financial markets and went full-time in 2016. Since then, he's built a reputation for transforming traders through his data-driven approach. He's the founder of the 3% Club, a free community dedicated to helping traders achieve elite performance. Since 2021, Dan's mentorship has turned over 100 traders profitable, validating the power of his unique, repeatable system. Dan's secret is simple: data-driven strategy. He proves you can turn a basic approach into a hugely profitable one by just understanding your trading data. Dan, welcome, mate. Thanks for joining us.
Thanks, Jason. Thanks for having me on, mate.
And actually, I've been, following you on LinkedIn ever since we were at the London Prop Expo in September, and your results speak for themselves. You're always posting how your students are passing challenges and getting payouts.
Yeah, interesting how the landscape shifted to that prop model, and everybody wants prop firm accounts now. I'm reluctant to call it prop, retail or simulated prop trading. I like to call it instead, but. Yeah, it was an interesting event, right? I think 4,000 attendees there, which was a lot more than I was anticipating. You know, Simon runs those regular events. You get maybe 1,000, 1,500. This one, 4,000. So it shows how popular that model is becoming or has become.
Yeah, and you were one of the main speakers there. How did you get on that day?
Yeah, good. I wanted to sort of talk a bit about the fact that there's a big difference between prop trading and just actual trading, and it was important for me to try and outline that to the attendees early on, because I think it can be quite easily confused. Prop firm trading for these retail firms with drawdown parameters and, they're designed for you to fail, excuse me, is obviously very different to managing capital. Your goal with managing capital is to make the most or the highest percentage return you can make over 12 months, 24 months, however long. Whereas the goal with a prop firm is realistically to get paid as quickly as possible. So, I tried to talk a bit about the fact that a lower win rate system with a higher risk reward that could be suited more to a live account or a fund or whatever you're managing is not necessarily applicable to a prop firm account. And a higher win rate is actually a better model to approach these prop accounts with. So tried to double down on that, and yeah, it was good. It was interesting. It sparked some good debate. So I know you spoke at the event too, and it was certainly a good day.
Yeah, it was a good day, and those are actually really, really good points, which I haven't had no one else has brought that up, especially in these kind of discussions. It's a really interesting point. You do need to restructure your strategy. A higher win rate, lower return on each trade. It's key, isn't it?
Yeah, absolutely. Because I think what people miss is their consecutive losses. So I think that's one of the most important pieces of data that you can collect, because if you understand your win rate, then you know what your average and your max consecutive losses are, or they're likely to be. You can make an estimation. So when they happen, you don't then strategy hop or start to tweak your edge or deviate from the plan. And the thing with prop firms is if you don't understand what the max consecutive losses are, how do you know whether you're going to stay within the drawdown threshold? So if the drawdown is a max of 10% on the account, but you're trading at 2% risk and you have a 50% win rate, you're guaranteed to hit the drawdown limit at some point in your trading, over 100 trades. So understanding that is crucial. And that's why trying to push that win rate as high as possible to then allow yourself to trade at slightly higher exposure and lower risk reward is beneficial for that model specifically. So that's what I teach my students who go after the prop firm stuff. But then equally, if they want to learn to trade properly, it's more about optimizing your return over 6, 12, 24 months, as opposed to just going for the high win rate, lower risk reward.
Right. Two very different approaches. It's a really good observation. And would you say that one of the biggest failures then for those traders who try the prop firm challenge is just that strategy hopping? They have a small string of losses. They go into a panic and they think, I need to try something different.
Yeah, absolutely. I mean, probably 99% of the people that come to me having tried a prop firm challenge don't really know their edge. They can't define it, let alone tell you what the win rate is and all the data around the max favorable excursion, all the stats that they need to look at in regards to their data to optimize their parameters and help it perform. So I think one of the reasons why prop firms have such a low pass rate is because they're so highly accessible. The barrier to entry is non-existent. The downside risk on our side is minimal as well. So people see it as a chance to just transform their lives, get rich quick, put a minimum amount into buying a challenge, and then see a payout that could be double their monthly income or whatever. But the reality is you can't really do that without, as you know, a profitable edge, one, but two, actually understanding your data, understanding your edge comprehensively. So I think that's really the reason why.
Okay, so you're saying that the majority of people almost treat it as an expensive lottery ticket, and they try to gamble their way to a payment, not really understanding the mechanics of it. And even traders, you've just pointed out that a successful trader could go in there and actually fail the challenge because they haven't got the right approach to just pass a challenge.
Yeah, absolutely. Absolutely. And also, I had a conversation even yesterday with someone just saying, my strategy's not working anymore. And I said, okay, well, how long has it not been working for? Oh, I've lost the last 5 trades. Okay, well, if you understand your win rate, that can be perfectly normal. I've had that conversation 100 times. Oh, I lost 6 trades in a row. This isn't really working anymore. But your win rate's 38% at 1 to 5R. It is working. You're going to hit 12 losses in a row this year, most likely at some point. So understanding that data is really, really crucial. And I'm trying to sort of push my content around data because it's what I've always done. And that sort of came about for me because I lost an edge in the past. I had an edge that I traded the London Open through the Brexit negotiations. The market was very volatile, as you know, across pound pairs, the FTSE, from sort of 8 a.m. GMT till about 9:30 every single morning, because we were getting these headlines coming out, and you could usually catch quite a big move. And then 2019, as you know, the Brexit stuff had died down, and then that London volatility just didn't exist anymore. And my edge was diminished, but I had absolutely nowhere to go with it because I had no data. And that's what led me down a data-driven path. Even though I traded for years and I'd found profitability and I was doing it full time, I was still unable to understand why my edge had suddenly completely diminished. I couldn't fall back on, well, what's not working? Is it not working between 8 and 8:30? Is it not working with these parameters, this particular setup? All I had was a bunch of screenshots of trades and an account history, a broker account history, which doesn't tell you anything, as you know. So that's what put me down that sort of data-driven path. And I think prop firms, no different. If you want to trade a retail prop firm, a simulated prop firm, even these guys that are gamifying the system, which you can do, they still know their stats. They still know that they're going to blow X number of accounts, but if they buy 20, then they're probably going to pass 14 of them and secure X number of payouts and so on. And I think that's key. Most people don't know that data.
Yeah, these are really interesting points and crucial points. So I want to actually go. I'm going to go back to just a bit of background, how you got into trading, and then I want to ask you about how long that when you realize, okay, I've got to go deep into the data, how long that process took you to become profitable, because it sounds like you had kind of 2 stages in your career, and both led to success because you were successful from the start. So how did you start, and would you say that the timing, getting into the market when there was that volatility and you identifying that, that was obviously key to your initial profits?
Yeah, absolutely. I was very lucky. So, not starting as early as yourself, but starting at a time before social media and we didn't have this sort of Instagram influence and TikTok generation that we have now. And I don't know if you know Sam Evans or Robert Dunn, but I met Sam Evans, who worked for the OTA, Online Trading Academy, and he'd been mentored by a guy called Robert Dunn. So he was an ex-Goldman guy, worked on the CME back in the day. And I was lucky enough to do a course through the OTA, but I had Sam Evans and Robert Dunn as the mentors for that. So I was set off on the right path from the get-go. You could have done a course with them and had a totally different mentor. I was very lucky to have had two of what I deem the best mentors with that company. And every mentor within that sort of company had their own unique style. So you learn a lot about their particular style of trading. And I was set off on the right path. I was taught very simple supply and demand dynamics. It was simple concepts, but it was taught realistically. Unlike what we see nowadays with these crazy payouts, and I call it Lambo lifestyle. The stuff that you see all over Instagram and stuff. And I then went down the journey I think pretty much everybody goes down, which is they spend about 3 or 4 years, maybe more, trying to find the holy grail within what they've been taught. So for me, although I was trading a system I knew made money and worked, it still took me 3, maybe 4 years to understand that it's just a game of probability. And when I lose a trade, I don't need to sit there for 3 hours trying to pick apart why it lost and what I did wrong, because I didn't do anything wrong. It's just the nature of the system that we're trading. I was then fortunate enough to kind of adapt that edge and bring my own edge into the markets through sort of 2016 to 2019. And that's where I traded the London Open. And when that edge diminished, I basically went full circle. I went right back to what Robert Dunn had taught me from the very start, simple supply and demand dynamics and concepts. And I built loads of data on it, everything you can think of. I was looking at my average drawdown across 100 trades, my missed potential, so my max favorable excursion, my the time of day I was executing, the assets I was executing, the correlations between the assets. And really, if I'm honest, I started in 2012. Everything changed for me in 2022. So that's why I really hit new levels. So that's 10 years of trial and error. And that's what it took for me to get to a point where I'm really consistent now. But that consistency has come from, I don't know if you're the same, but it's come for me from sleepless nights and going down every system, breaking down every metric that you can imagine. 16 hours sat on a chart non-stop, figuring out, cross asset correlations and why the bond market is causing a move in the dollar and what's happening on yields in relation to the S&P 500 and all these dynamics which take a long time to understand, and that has led me to the edge that I trade now, which is supply and demand concepts with cross asset correlation. It's really simple technical concepts, but it's a little bit more in-depth, understanding the market as one entity as opposed to just looking at one chart and saying, right, I've got supply and demand here, that should hold. Well, no, it will only hold if whatever's put it there is also holding,
So many important points in that paragraph there. You've just pointed out that it takes years, and this is a message that just people don't understand. They think they're going to be able to be profitable within months, certainly within a year. They just have to understand that you've really got no idea of what you're doing for at least 2 to 3 years. And even then, to refine a strategy and build a process and have the dedication and focus to stick to that, it's a very long-term game. It's so interesting that you stuck at it really for 10 years before you felt you turned a corner. And to be honest, I think that was true of me too. I am not a naturally gifted trader, not in a million years. In fact, I'm probably not built at all to be a trader. And it's only through not giving up that I managed to find any success at all.
Yeah, absolutely. I've seen it with students actually that have cracked it in a year. I trade closely with a guy now, and he has cracked it. He started with me last October, and he's actually consistent. But he's a rare breed, I do believe. I think
but that's because he started with you and understood, the process and the data-driven approach, I imagine.
I hope so. But I've had a number of students equally that have started with me, and then they've strategy hopped, and they've been in another 6 different mentorships at the same time as mine, and they've never found consistency. You can just see it from the get-go that they're not going to find it because they're looking for a holy grail system that doesn't exist.
Just about to say they're looking for the holy grail.
Yeah, exactly that. And I fell into that trap as well, 100%. I fell into that exact trap. Yeah, yeah. And it's a rare person that doesn't. Your mind isn't geared towards thinking in probability. Especially when we're at school as children, we're taught you got an answer right on a test or wrong on a test. You didn't get it 70% right. And it's the same with jobs as well. I talked to a surgeon. I've talked to my brother-in-law's a pilot. He doesn't try and land his plane right 70% of the time, something I said on another podcast. And equally with the surgeon, they don't try and do the surgery 70% correct. Everybody's going for 100% all the time. So our brain is wired for that outcome. And yeah, I think that's why some really high achievers actually struggle with trading, because they're not used to losing. I've had loads of them through my mentorship. What did I do wrong here? Because the trade lost. Nothing. And they sort of can't comprehend. What do you mean nothing? It didn't work. Yeah.
That's such a good point. And that's another really excellent point. I was trying to code my strategy and trade execution and trade management. And there was a little team I put together who we now have an AI company. We gave up trying to do what I do. It wasn't really me that was giving up, but because they couldn't perfect it. And they were saying, this is only making around 5% a month. And I was like, but that's fantastic. Just don't touch it. Just leave it. They were like, no, we can definitely improve that, because, they come from that coding background and they want to make it perfect. So it's actually them that gave up. I said, look, I'm quite happy with this, and we'll have months when we don't make any money. It's not a problem.
Yeah, absolutely. I think also understanding, was it fully mechanical, the system, or did it have elements of human or AI sort of discretion?
No, it was me that was, well, actually, it was so primitive that it was me that was actually identifying the levels, and the system would then enter the levels based on confirmation. So it wasn't sophisticated at all, but because they couldn't get it up to a high percentage return, they thought it was failing.
Yeah, it sounds like a fantastic system, and obviously 5% a month, is a brilliant return. But something I've experienced as well with a lot of traders is that they come from looking for an algorithm that really isn't, the return they're looking for isn't possible. They're not going to find it. They want a 75% win rate at 1 to 2 risk reward with a fully mechanical system. That doesn't exist. There's no such thing. In my experience, you're doing very well if you've got a 60% win rate at 1 to 1 with something mechanical. And that's where the human element comes in. That's why I asked, because I was interested to know whether there was a human input into that system or not to get those sort of returns. And inevitably there was, which was you.
Well, yeah. Obviously through this podcast, I've met some very interesting traders, very experienced guys that are way smarter than me. I interviewed a guy last week who's been coding since he was 8, and he's got hundreds of algos going, but he said they need constant monitoring. You don't just switch him on and walk away. He spends all day monitoring and optimizing these algos.
Yeah. So again, he is the edge there, right? It's not necessarily the algo. Yeah. And that's the way I look at it with my edge, really. The supply and demand concepts are mechanical. You could code that for sure, but the discretion, the human element, is the cross-asset alignment, and also just a basic understanding of market trends. Are we in an uptrend? Are we in a downtrend? And how we identify that. So just some very basic things that take what would be a 60% win rate at 1 to 1, or maybe even 55% to 75% plus.
Yeah, that's so true of me. Literally, my edge is just trends. It's the first thing I look for. Can I find a trend in a time frame that makes it worthwhile? And even then, there are trends out there at the moment, especially the yen pair trends. Yeah, we're in bull trends, but they're not in a trend that I can trade, because we have far too long periods of consolidation or far too deep pullbacks for me to even bother. You can get in at a great level, but there's really very little return on it. You might have to wait days or weeks because it's just not moving. So it's only my experience that tells me just forget about it. Don't even get involved in that market. It's just going to be a struggle, and you're going to remove your focus from other opportunities if you're in those. If you've got 2 or 3 trades on for me in the yen pairs at the moment. Okay, so now I'm really interested in, after the whole Brexit trade, which you obviously did well out of. It must have been frustrating for that to end. What was your thought process, and how did you think? Right, I've got to keep going. I know I can I can conquer this. And then the data-driven approach, really interested in how you develop that and how long it took you to then be profitable again and develop a new strategy.
Yeah. So I took on some part-time work because I knew that I needed an income, for the time being. And I became completely obsessed. My wife would tell you I was barely going to bed at times because I was sat in the office going through charts. Yeah. And yeah, it definitely was for me. And much like you said something there that I resonated with, which is you're not a natural born trader, and nor am I. I'm not a natural born trader because I see my students achieve better results than I do a lot of the time in terms of monetary return because they're they're more willing to put risk on, and I'm not. I'm very risk averse, and yeah, so it necessarily doesn't make a great trader, right? But it equally makes a sustainable trader, I feel. I've been in this quite a long time, not nearly as long as you have, and you're still here doing it. And that's because of that risk aversion. So, yeah, same. I had an instance yesterday where at the start of the day, I called the top of the day yesterday on the S&P. So I said, look, I'm certainly be interested in selling the S&P, the CFD, US 500, if it comes to this level around after the NFP data, because we had NFP yesterday on a Thursday for September job figures. And the NASDAQ was also pushing. So I had that cross asset alignment to a similar zone. I called it, but I didn't trade it. And everyone a lot of my mentees traded it, but there was just something about the trade itself which didn't quite line up, which I like to see. And that mindset has kept me in this for a long time. But there are certain days, like yesterday, where it really hurts because that trade dropped 2%. The S&P dropped 2% after that, and it was the high of the day, and it was a really out there move. It was not expected at all. And that hindsight feeling, that FOMO feeling, is probably the worst feeling you can feel. It's not the trade that you lost; it's the trade that you called but you didn't take. That's the worst feeling. It's gut wrenching.
It is, but you called it, you got it right, and your mentees profited from it. So
Exactly.
it was still
Yeah.
a worthwhile exercise.
Yeah. So going back to what you asked, I did go down the path of securing an additional income, which took a little bit of weight off at the time. And I went very heavy on the data, but I just reverted back to saying, okay, I know I had an edge with what I used to do with what Robert Dunn, Sam Evans had taught me. How can I refine that edge to make it better? How can I increase the win rate? How can I maximize the parameters per trade? How can I figure out what assets perform best at what times and so on? So I just started recording everything, and not just recording live markets. I was also back testing and recording. So I was building data just every single day, going through previous markets and FX replay and everything else. And I built enough data to know, okay, if I just show up and execute this every day, then I'll make money. I've got an edge. I can't fail. And that's what I did. And it totally changed my mindset around trading because I came to this sort of data-driven approach. And even though yesterday, I made the error of not taking the trade, hindsight, I made the error. At the time, it didn't fit the edge. So it was a correct decision. It's still based on data. So it's still based on everything that I've recorded to know that if I execute this trade, it will have X percentage chance of working. And there are trades that I know have over an 80% chance of working now based on my data. So when they show up, I'm going to take them every time, no questions asked. But there are other trades. Yeah, exactly. Yeah. But there are other trades that I know from my data that are probably sat in the 50% region at 1-to-1. I'm not going to bother with them. My data's told me that there's not really an edge there. Just sit out and let them pass
that's
by.
such a skill.
Yeah, and
Knowing
you know
when
what happens?
what the right opportunities are, and not just thinking, oh, I'm bored this morning. This has got a 50% chance. I'll just go for it.
Absolutely. And I still say to the students, I'm full transparency here. I'm sitting out, but it doesn't mean it's not going to work. It's got a 50% chance or a 53% chance of working, which isn't enough for me. So understanding that, because I think a lot of students, they'll get into a mentorship or they'll start trading with someone and they'll say, oh, they said not to take that, but it works. Okay, great. It worked this one time. It could have had a 20% win rate and it worked. It doesn't mean anything. You've got to start looking at that. Exactly. Yeah. You've got to look at a large sample size. One trade, 1 week, even 1 month really doesn't mean a whole lot. I get them to do 150 trades minimum before they even start looking at anything.
Yeah, that's really smart. Well, I don't know. I would imagine you obviously know what you're doing. You've obviously proved it, and your mentees have probably got more faith in your trade ideas than you have. I find that with myself. I'm thinking,
Yeah.
oh, I'm not so sure about this, and I say to them, look, I'm not sure about this, but it could be a good support level. They're all in it, and I'm not, and the trade wins. And the one I do doesn't win.
I know the exact feeling, mate. I had that yesterday, but it's just one of those things. And something you said earlier as well there, at least we called it right? So our analysis was on point. And if nothing else, yesterday becomes another piece of data that I can put into a Notion template, a spreadsheet, and say, okay, if that occurs 20 times this year, what is the win rate? How often does it work? How often does it fail? And it becomes part of a larger sample size, right? So I think I read something not long ago that said how I win every trade. So I was interested to look at the article and I read through it. And it wasn't actually about how they win every trade. It was how every trade gives them information. So it's a win, and I thought that's exactly how I feel. I feel every single trade is giving me something, even if it's a negative P&L, it's giving me something.
Yeah, that's very smart. Well, look, I know that 9 out of 10 traders will never adopt the approach that you have because people are just lazy and they can't be bothered. They want quick money, instant gratification, which goes back to what we were saying about these prop firm challenges. They treat them as a lottery ticket. But okay, let's say I'm new. I'm signing up to the 3% club. What can I expect from day one? How will you guide me to becoming a profitable trader?
So what I do is I have free server, and the free server is a funnel into my premium server. Now my premium server is about 60 traders. So we all trade together every day. And what those traders get is they get an initial onboarding call with me. And that initial onboarding call is really for me to, one, not assess whether they're right for the group, because I've already done that. I turn a lot of people away because one bad egg can ruin the mentorship, I find,
Yeah.
because everyone has
And
a voice
do
in
you
there.
mind telling me what your filter is for that? I'd be really interested.
Yeah, so if there's any talk of money on the first call, they're gone. If there's any talk of, yeah, it's a common thing.
Can I expect to make?
Exactly. Yeah. How much your mentees making? Yeah, they're gone. It's just I usually tell them that I've got a waiting list, and they never get a call back. So, um, yeah, if it's money driven, if it's ego driven, I've even had the people contact me, and then I do a little bit of a deep dive on their socials, and they've got, say, something trades or something FX in their username, and I think, right, okay, they're just looking to take what I've got, resell it. So I'm protective in that sense. Um, yeah, you just know, don't you, Jason? You know when somebody's not going to fit into the group, and my group at the moment are not ego driven at all. I've got some professional traders in there, managing family offices and large capital professional clients with various brokers, and yeah, and I've had loads over the years that have come and taken things from my edge and brought them into their own edge and so on. Equally, I've got a guy in the mentorship at the moment with 1.2 million of prop firm capital under his belt. So everybody's on sort of their own path in their different paths. But what they get is they get my strategy from start to finish, fully broken down, and a two-phase mechanical process to follow to getting profitable within 12 weeks. If they follow everything that I give them without any psychology, without any interference with their own thoughts, then they'll become profitable in 12 weeks. However many manage to do that is a different matter, right? Because it takes an iron mind to execute just completely robotically. And the majority of them have come from some other mentorship, some other group, years of failing, whatever it might be. My sort of ideal candidate, or my most common mentee, is someone that's been around the block. They've been trading for a long time. They haven't looked at this data-driven approach to trading, and it's sort of their aha moment of like, why was I not doing this before? So I charge a premium for the first onboarding call simply because this edge has taken me 13 painstaking years, of sleepless nights of my soul to develop, and And for me, I have to protect it a little bit. It's no good having someone come in for a one-off monthly sub and saying, right, that was 4 weeks. I know everything. I've got all his resources, the whole thing. Off I go. I'm going to go and repackage this or sell it somewhere else. So I'm a little bit protective in that sense. And then the other thing I do is I work with some traders, so a small group at a time, on a one-to-one basis for 12 weeks. So I do the 12 weeks with them, yeah, and they see the best results without doubt. Obviously, yeah, because I call it accountability coaching, because one of the conditions with it is I have to have access to either third-party software that shows me their account or an investor password to their account. So there is no hiding. And as you know, you
I think
perform
that's
better
brilliant.
when someone's watching. So
I think that's brilliant and so important for two reasons. Firstly, trading is such a lonely business anyway. It's really difficult. Well, it's difficult to find anyone to talk to, but let alone someone who's actually experienced and willing to pass on that experience. But also, when you have an accountability partner, yeah, it doesn't matter to what level you're inspecting their accounts, but they know there is someone looking over the shoulder. Just that makes you think, okay, I don't want to cock this up. I don't want to look like an idiot. I don't want Dan to be thinking I'm a waste of time. So it just brings that extra level of discipline in.
yeah, absolutely. The 12-week program gets the best results just for that. I'm sure it is because of that one condition, which is you mess up 1 week and then you've got to sit on a call with me, a few days later and explain what happened. And you can see people sometimes just feel like an idiot because they think, I did this, but I don't know why I did it. And they do it again the next week. It starts to become sort of, it's so embarrassing for them that they have to then just eradicate that mistake. Otherwise, they know they've got to sit on a call and that, they've paid for 12 weeks of mentoring and they're essentially wasting their time and money by not actually applying what they should be. So, yeah, I think there's a lot to be said for that. Even if you can't afford a mentor or something, there's something good with having like a trading buddy, a friend that you at least sit on a call with on a Friday and you go through the week. What did you do this week? And if you could say, well, I messed up, I called the high here and I didn't take it. And why didn't you take it? Well, I don't know. I had self-doubt, not confident enough. Okay, well, next week you need to be taking those and knowing that we're sitting on a call again next Friday, So I think that's a big factor.
Yeah, and it's a rare service. I know that because I do the same thing. People say to me, "This makes a world of difference, just being able to pick up the phone to you and ask questions." So, I recommend people to do that and sign up with you. It can literally be the difference between success and failure. Actually, on that point, at the prop firm show that we were both at in September, someone from the audience was talking to me and asking me a question. And he said he's failed loads of challenges. And finally, the solution that he found is he enters the trades and then he has some system where he gets locked out of the trading platform and only his wife can access it. I don't know if you were there and you heard it. And he said, yeah, she exits the trades. And he said, and it works. And I said, do you know what? That is just genius. If that is your process, you do the entry, your wife does the exit, and you're not allowed to touch it. Just keep doing that. It's brilliant.
I love that. I love niche. That's his edge, right? His edge is he locks himself out and his wife closes. Yeah, I love that.
Yeah, that's his edge.
Do you? So yeah, you're a meddler.
Oh, my problem is, I've got a lot of technical analysis experience, so I can see more than 50% right of where the market's going to go. And the problem is I don't know the time scale for that. So I'll get into a trade and I'll just sit in it and it'll show a really good profit. And I won't take the profit because I'm thinking, it's going there. But of course, then it'll retrace and then go down. And
Sure.
I'm greedy. I'm greedy. That's my problem still. And
Yeah, sure.
I should have someone doing my exits for me.
See, I think it's interesting what you've said there because I think so. Trading, you've got to always think. It's a cliche to say it's a marathon, not a sprint, but I think in better terms, you've got to think in the macro always. But unfortunately, we live in the micro. We live in the feels. We feel every tick of movement. We feel our P&L going up and down every day, every week, every minute. Every hour. And all those feelings that we feel associated with trading are detrimental because what do we feel over 12 months when we look at our P&L and we did 40% on the year or whatever? 50% on the year. Fantastic. You're an elite level trader there. You're outperforming any major hedge fund. You're outperforming the indices, holding on to the S&P for the year. You are outperforming the market at that point. And if you feel that, you feel great, but you don't. You feel every single moment of what that came to. And every single moment is an emotional roller coaster. It's brutal. It's absolutely brutal. And that's why so many folks.
I'm actually a contradiction. I still trade watch, and I tell people not to. I set targets, which most of my subscribers automatically set the targets and exit, and I'm like, nah, I'm going to run this a bit longer. So I still do the wrong things.
I know, mate. I know the feeling. I've had a mentee actually say to me this week, "I'll be a millionaire next year with what you've taught me." And I said, fantastic. That's fantastic. I love to hear that. And I firmly believe it. I actually believe it because of what he's done so far and what he's applied. But I thought afterwards, I won't be, because I'm too risk averse. I don't have. So he's got the edge. We trade the same trades. It's the same strategy. We trade them together. But he will put the risk on next year, and he has conviction in the edge, and he knows that it will generate that return. But I think it comes down to a lot of other factors. Upbringing is a big one. How you were brought up around money. For me, I was brought up around, so I was brought up around scarcity. I had a great childhood, fantastic. My parents gave me everything they could, but my dad lost a business, and money was a big topic in my household. It was, how do we afford this? We're going to lose the house. When my dad lost the business, it was very stressful. And I know I carry that with me in my trading subconsciously. I don't want to, but I do. So I know that I always am being overcautious with trades, not putting perhaps as much risk as I could on. And it all just comes down to my upbringing. I firmly believe it. And I don't want to say that as like it's just an easy, it's an easy thing to say, well, it was my upbringing, it's my parents' fault. But I know that that's shaped my thoughts around money, because I'm cautious in everything I do with money, not just trading. What I spend, I'd never be frivolous with my spending or anything like that.
I love that. We've followed a very similar approach. When I was sick, I had a good childhood, public school, all that. 16 years old, my father lost everything, and it impacted me enormously. Do you know what? That has actually made me realize something about myself. You just saying that. I'm ridiculously cautious. I have I'm a lot older than you, and I've had a lot more time to make some money. So I've done okay. And I'm lucky now that I don't need to work, but I live an extremely normal lifestyle. Most of what I earn, I save or invest, even now. And people saying to me, "What the hell are you doing? Just go and enjoy it." But actually, I don't need to. I'm happy with a normal life. But yeah, that has clearly shaped me for the last 40 years. And I don't think I even realized that. You've just shone a light on that for me. So yeah, it is really important to understand what's going on in your head and how you have been shaped, because that will affect your results. But then, your conservative approach has led you to be able to be in this business for decades. And no doubt you will be in this business for decades. So it's not necessarily a bad thing.
Absolutely. No, it's not. It keeps you in it for the long game. Definitely. And look at your success now over your whole career. Again, the macro, you've created that success over the macro. But in the micro, you felt a lot, because you've seen, what's the worst that can happen? Well, you've seen what the worst is that can happen. I think that's the same for me. Actually, what's the worst that can happen? Well, you can lose your house, and you could be homeless, and you're on the streets, So it's a different mindset, and we definitely carry that with us through our trading, for sure.
Yeah, is that something that you mention to your mentees, understand what drives you or what your fears are?
I do, but I think it's a very personal journey. I think everybody's got to go through it on their own. Nobody will understand. I've had a lady I taught to trade. Actually, she said, she was 40, and she said, I thought I knew myself until I did this for a career. And you start to uncover things about yourself you didn't even know that existed, right? Like those things that, absolutely, yeah, like those things that you're carrying with you from your childhood. And I've seen some people very successful in trading that have had the opposite childhood. Had money was in abundance, very frivolous. Money comes and goes. It's easy to make. That mindset actually takes them quite a long way as a trader, because they never get fearful of putting the risk on. Okay, sometimes it can push them a little bit too far the other way, where they're a bit they over risk or over. Yeah, sure. But I also find that comes from a certain personality type as well, not necessarily just from an abundant childhood with where money was in abundance. It comes more from I think gambling is more of an addictive personality. It's to do with addiction as opposed to upbringing.
Well, this is a subject that we could talk about for quite a while. There's a trading psychologist on LinkedIn that I follow, and her name is Louise, and I forget her surname. I believe it begins with W. I've invited her on the show actually because I'm really becoming more and more fascinated with this subject. And she had a post on there where she talked about imposter syndrome, and I read it and I was like, "Oh my God, that's me!" I never realized in 40 years of working that I actually have this imposter syndrome.
Same. I have that.
I don't have faith in my own signals still.
Sure.
And would you say that is applicable to you too? Probably for the same reasons that it is for me.
Absolutely. So I have in my head, I'm very confident because of my data, and also my students give me a bit of confidence as well. And also, I've done pretty well at trading. I can't sit here and say I've not done well, because I have. I've earned well from trading. So I can't pretend that it's sort of I don't deserve it or whatever, because I put the work in. But I definitely feel like one of my friends tells me that I think too small. That's my issue. So he's been very successful in his career and business. He's retired at a young age, and he always says to me, you're doing it again. Listen to how you're speaking. You're thinking too small. And again, I put that down to my upbringing. What is a good salary? Well, my dad would tell me what a good salary is. That's what I think is a good salary. Well, actually, no, that's not a good salary at all. In the industry that we're in, or, in this day and age with kids making 100 grand a month on social media, actually, no, that's not really a good salary. So I think that sort of the barriers that we put around things like that really shape us as traders as well. Some people think 50,000 a year is a good salary. Some people think 50,000 a month is a bad month, right? So it's about finding or changing your thought process and your conceptions around what is good, what is bad. There is really, in trading, there's no limit to where you can go, provided you apply your data, apply your edge, and you scale. It's so scalable, right? But I think our mindset holds us back.
It's really, really interesting. God, I could talk about this for ages. But it's also about managing expectations and not getting ahead of yourself. So there's a balance between those two factors.
Absolutely. Yeah, 100%. Yeah.
Dan, I really could chat away. Maybe we should do another one in the not too distant future. But for now, how do people find you, and how do they sign up to the 3% Club?
I've got a couple of ways. I'm on LinkedIn, as we talked about earlier. So you can find me as Dan Munday on LinkedIn. I've got the 3percentclub.co.uk. That's the number 3 and then percent written as percent. I'm also on Instagram. I've got a bit of a play on name on there, which is the Demo Trader. So I secured that username many years ago, and I've just kept it. I've had people actually ask me if they could pay me for it, so I've just kept it as a result. So I do a bit of social media. I do a bit of YouTube as well. You can find me on YouTube by searching my name. I put a video out probably once a week, and all my videos are talking about data. I'm talking about how to use data to find an edge in the market, basically. So as I say, it is really, and as I say to people, if I took pictures of Lamborghinis and Rolexes, I'd probably have 1,000 mentees. But because I take pictures of spreadsheets and equity curves, I've got 60, that's the difference.
Yeah, but you'd have thousands of mentees that would frustrate you and only sign up for a month or two when you didn't make them a millionaire. So you don't
exactly
need that.
That's
not
exactly
the way to run
that.
a business.
Yeah.
Exactly. I can see that you know what you're doing, and you're very serious about the business.
Yeah, 100%. It's the only way to be. And like you just said there, it is a business, right? And it is another cliche. Lots of people say treat trading like a business, but then 95% of people don't. So maybe we need to keep saying it. It is a business. There are expenses. You have to have a routine. You have to show up at the same time every day. I treat it a bit like a job. So rather than saying, I just wake up when I wake up. I wake up at a set time. I do my pre-market analysis at a set time. I do my call with the guy I trade with at a set time. All these things come into play like a job. And that's the only way I've found success.
I 100% agree with you. I'm 57. I've been doing this since 1987, and I still get up Tuesday to Friday at whatever it is, 6 a.m., write the reports. Fortunately, on Sunday, I do them on Sunday night, so I don't have to get up on Monday. But it's consistency that pays in the long run. And, forget trying to be rich in 2-3 months or even 2-3 years. It takes decades. Well,
Absolutely.
It has for me. There's no shortcut, unfortunately. There are smarter people than me that maybe have got rich quick, but I sure as hell didn't.
Jason, question for you before we wrap up is, do you think that anybody could learn to be a trader, or do you think it's something that you either have or you don't have?
That's a great question. I would like to believe that anyone could be a great trader if they had the right guidance. And that's not me trying to sell your service or even my service. I mean, whatever you do in life, my son is training to be a professional footballer, and he's been coached all his life. You can't do anything to any expert level without a coach, and especially something mental. I mean, you can't train yourself to be a surgeon, okay, or a pilot or a racing driver. So why do you think you can train yourself to be a trader when there's probably more psychology involved in that than most other jobs, and discipline and focus? And there's so many people don't understand that there's so many different parts to trading. You don't just switch on a computer and think, oh, I think gold's going up, I'm going to buy it. You have to develop your entry strategy, your trade management strategy, your exit strategy, and how do I identify low risk trade opportunities through technical analysis or fundamental analysis? And even when you've done then you've got the whole psychology issue, which in itself is just such a massive subject. And I think that anyone could, if they were utterly focused, had the proper expectations in terms of how long it takes to become profitable, and and to understand the process and to execute the process. But 90% of people literally just don't have the qualities to be able to go through that.
Yeah, no, great answer. I was interested to hear your take on that, because my thought is that anyone can do it, but the variance in time is going to be huge. So some people, based on what we talked about earlier, their upbringing, for example, may master it in 2 years. Someone else may master it in 10. I think anyone can do it, but the journey that you go on is going to be completely different and completely different lengths of time. And some people are just naturally born traders because they learn it in 2 years, sure. 18 months. Yeah.
For sure.
Yeah.
I saw that back in on the trading floor in the 90s. And then when the floor went digital, there were some guys that had not traded on the floor. They walked into an office and within months, they were just making so much money, unimaginable money that I've never got anywhere close to. But they were the 1% or less than 1% that could do that. Everyone else was struggling, including myself. Yeah. Okay, Dan, fascinating. I could keep chatting, but I think we're running out of time. Thanks so much, mate. Let's do this again in a few months.
Absolutely. Yeah. Thanks for having me on, Jason. Much appreciated.
That was Dan Munday, ladies and gentlemen. The message is clear. You don't need magic or complexity. There is no holy grail. You just need to listen to your data. Make sure you follow Dan's work and check out the 3% Club to see how he's helping traders move from theory to actual measurable profitability. And before you head out, hit that like button, subscribe to The Trading Battle, and drop a comment below telling us the most important data point in your trading. We'd love to hear what you're tracking. Till the next one, I'm Jason Sen.